Hello, everyone. My name is Moe and welcome to another episode of Income Investors. Today, with me, as always, John Whitefoot. But before I go into any details, I want to let you know that whatever you hear in this video is for information and educational purposes only. Investing comes with risk. And to read more about it, please see the description below. Wall Street usually talks about, don't fight the trend, trade with the trend, trade where the market is going, go where the money is going. But sometimes it can really pay off to be a contrarian. To say the least, contrarians are people who look at places where nobody is looking and they can find some great opportunities there. Today, we're going to be talking about Hasbro Inc. They're traded on NASDAQ under symbol HAS. John, if you want to go right into it.
Yeah, sometimes you come up with ideas that you're not even expecting, or they just kind of hit you on the head. So about a week ago, I was going to get gas, and I saw a sign on the side of the road that was advertising a foam war league, which I'd never heard of, but it also advertised Nerf products. And I thought, well, it's Nerf. So I went home, checked out Nerf, realized they pay a dividend, and they have a great story.
So, John, what can you tell me about Hasbro? What did they do? I'm assuming they have something to do with Nerf.
So, a little bit.
Yeah.
Yeah. They operate through four segments, but the one that most people know Hasbro for are their consumer products, which includes Nerf, Play-Doh, Monopoly, My Little Pony, Transformers, and other brands like that. They also make brands for other companies. They have agreements with Mattel, which is releasing the Transformers and Barbie movie this summer, and they're also the name behind Lucasfilms, which owns Star Wars, Indiana Jones, and Marvel. There's also an entertainment division, which does movies, videos, films, online content, and live entertainment. So they're known for acts like Peppa the Pig and things like that.
Very interesting. All these names that you're mentioning, Transformer, Play-Doh, Nerve, they're really, really, in with the kids these days. If you look at it, how is their stock doing?
Well, it's a consumer cyclical stock. So its share price has taken a bit of a hit over the last year. As of this recording, it's down 2% year to date and down 30% year over year. Ooh. But again, these results aren't a total surprise. If you've been following Hasbro, management expected 2022 to be a tough year, and it was. But the company announced a new initiative, which I'll get to soon. And because of that, the company's outlook looks quite robust. Even conservative Wall Street is on board, with analysts providing a 12-month share price target of $70 to $90 per share, which points to potential gains in the range of about 20% to 50%, which is far superior than some analysts who are calling for the S&P 500 to fall 20%.
Yeah, no, I mean, at the current moment, analysts are not too optimistic about S&P 500, and it's also very rare to see they're coming out with higher price target than the stock currently trading at.
Yeah, it's a good bullish sentiment.
For sure. So you had mentioned earlier Hasbro had a tough year. Explain a little bit.
Well, again, because of a cutback in discretionary spending and fears of recession, the company has been missing its financial targets. Fourth quarter full year 2022 results came in below expectations. For example, and don't get scared away, fourth quarter revenue fell 17% year over year. Full year revenue was down 9%. The company swung to fourth quarter loss of $129 million. Wow. And full year net income was down 53% at $203.5 million. There was some good news. Their one segment, Magic: The Gathering, became the company's first billion-dollar brand. They reported another record year at Wizards of the Coast and digital gaming, and it grew key investments, including licensing and direct-to-consumer, and improved adjusted operating profit margins. It also invested in growth, acquiring Dungeons & Dragons Beyond for $146 million, and that became earnings accretive in the fourth quarter.
And you mentioned something about new initiative at Hasbro. What are they doing there?
Well, yeah, again, consumer discretionary spending is down, inflation's up, fears of recession, household debt is skyrocketing. So Hasbro and other toy companies have taken a hit.
Right.
and seen their financial dive for the last number of quarters. But to combat the industry headwinds, Hasbro introduced its Blueprint 2.0 initiative back in October, and its plan is to grow profits by 50% by 2025. But investors don't have to wait that long to see results. The plan should deliver positive financial impact as early as the fourth quarter of this year. This includes focusing on new, fewer, bigger brands, advancing direct-to-consumer capabilities and licensing. Overall, the plan is expected to deliver $250 million to $300 million in annualized run rate cost savings by the year end 2025. But the bulk of that, up to $150 million, is expected to be realized by the end of 2023. Again, they're expected to grow profits by 50% over the next 3 years, operating cash flow in excess of $1 billion annually, and for yield hogs, the company expects to return excess cash to shareholders through its industry-leading dividend and future share repurchases.
Very interesting. And would you, and if I were to put it in simple words, would you say that this new initiative plan is essentially management's way of hey, let's turn around and let's get things in order, and that's essentially what they're doing, right?
Yeah, things were going well before the pandemic, or recently because of interest rates. So they're sort of being proactive,
right?
Because they know that the stuff happening with them now doesn't have to do with them per se. It has to do with outside forces.
And that's great. To see that management actually being active and actually taking an active role to improve things. But let's move on a little bit about again, we talk about dividend opportunities here. How is their dividend holding up?
Yeah, again, 2022 was a tough year, but Hasbro is still like an industry juggernaut. They returned, I think, $510 million to shareholders through dividends and share repurchases. And currently, it pays a dividend of 70 cents per share, or 28 on an annual basis, and that works out at an annual yield of 4.7%, which is pretty well on par with U.S. inflation, which is at 4.9%. Right. And it actually has a really good history of raising its dividend. Over the last 15 years, it's raised it 11 times. Where many companies cut or suspended their dividends during the pandemic, Hasbro maintained theirs at 68 per share.
Thank you so much for the analysis on Hasbro Inc. To me, Hasbro seems like a great contrarian opportunity. It could provide decent income and capital appreciation over time. In addition to all that, recently they announced a new initiative. This could actually help improve the bottom line and also could give a boost to the stock price. For those who watch us regularly, thank you for watching us. And for those who are new here, you could read more about John's ideas that he posts on incomeinvestors.com. And if you're new and you're watching us for the first time, don't forget to subscribe to our channel and like this video. And thank you for watching.